Good day, my name is Nasser Carstens and I'll be taking you through the Kering investment idea. Right, so Kering is an established French luxury goods player. It controls brands such as Gucci, Yves Saint Laurent and Bottega Veneta, and specializes traditionally in soft luxury such as clothing, handbags and shoes. It does also have an eyewear segment, Kering Eyewear. However, the vast majority of earnings are derived from soft luxury sources. In terms of valuation, we rate the counter as a buy with an intrinsic value of €767.99, which implies an upside of 15.6%. As of the latest close, this implies a 19.3% upside. In terms of our balance sheet, there are fairly high levels of debt compared to historical averages. However, strong interest cover and strong cash flows negate our concerns. In terms of regulatory risk, we have the possible downstream effects of Chinese economic prosperity. And essentially last year in August of 21, we saw Xi Jinping, who's the Chinese premier, or the premier of the Chinese Communist Party, come out and raise the policy of common prosperity, which aims to spread the wealth more equally within the Chinese society. We don't see this as having a direct impact, however this is ongoing risk. In terms of our catalyst, Asia Pacific does provide growth opportunities, specifically with the Chinese market. In terms of geopolitical risk, we see minimal Russian and Ukrainian impact. These two territories together make up a very, very small amount of revenue exposure. However, we have a possible medium to long-term risk, and we would see a greater risk manifesting, and we would definitely see a re-rating if we saw any military action between China and Taiwan. Right, so Kering is a otherwise mature company, and it is set to experience a few years of continued very high growth in the Asia Pacific region, and this is primarily due to a growing, established and growing Chinese upper and middle class. We forecast a 9.8% compound annual growth rate in sales over the next 2 years. Kering has a significant moat provided by its established brands, as we mentioned, Gucci, Bottega Veneta, Yves Saint Laurent. In total, Kering owns about 15 brands. However, these top three commandeer about 85% of operating margin. Just to give an example, Kering makes up about 58% of revenue and makes up 77% of operating margin. This is something you see throughout the luxury goods industry, and this just speaks to the winner-takes-all nature of the business, even within companies such as Kering. Then the traditional high net worth individuals that form the client base for luxury goods are much more resilient to hardship. However, the share price is still very cyclical. Then, as we mentioned, Chinese economic prosperity is an ongoing risk and something we continuously monitor just due to the disproportionately severe impact it had on the share price. We think it's very unlikely that the Chinese government will directly interfere in the spending habits of high net worth individuals. However, I think we're likely to see going forward, less conspicuous spending by Chinese high net worth individuals. Right, so this graph just supposed to give you some background about the landscape, how we think of valuations and how we view the company. So essentially, with the grey line, you can see our EBIT margin. From about 2000 to 2009, you can see that EBIT margin hovered at around 7%, and then aggressively took off to where it is now at about 20 to 30%. And your blue line there, you can see your EV/EBITDA multiple re-rated over the same period and reflects the market's reaction and sentiment to this. This happened primarily due to Kering focusing on its luxury brands and strategically focused on becoming a pure luxury player. And by doing so, it sold a lot of its non-luxury brands such as Volcom and Puma. Right, so this graph just shows you over the past 10 years what our EV/EBITDA multiples have been doing. You can see over the last 5 years, a strong mean reverting level around 15.2 times being established, with your dotted lines being plus and minus 1 standard deviation. Right, so we value Kering based on a bear, base and bull case scenario, based on our market multiples and our EBIT margins, which we make different assumptions for. Right, so the company currently has a EV/EBITDA multiple of 12.7 times, which is below the 5-year average of 16.1 times. We weight our three scenarios, 30%, 30% and 40% for our bear, base and bull cases respectively. We weight our bull case slightly higher due to some of the reasons we discussed, the resilience of high net worth individuals, higher growth provided by Asia Pacific, and then also this is counterbalanced by our position where we are currently in the global economic cycle, and then also Chinese yuan prosperity risk. As of your latest share price, we had a price of 619 euros. Right, so this graph is just to show you where Kering lies relative to close peers. On the x-axis you can see your forward consensus growth rate. Kering's in at about 18% over the next 2 years cumulatively, close to the LVMH, and this is what we'd expect, since LVMH also competes in a similar soft luxury and handbag space, quite similar to Kering. On the y-axis you can see your EV/EBITDA multiples, Kering providing slightly bigger headroom there than LVMH. Right, for more detailed information, please refer to the full report, which is available online. To place a trade, please speak to your financial advisor or contact our trading desk. Thank you very much.